The Pi Network token has been stuck in a prolonged consolidation phase, holding close to its lowest levels ever recorded, despite news of a major upgrade from its development team. At the time of writing, the token was hovering around 35 cents, just a fraction above the record low of $0.3167. This prolonged stagnation has led many in the crypto community to wonder whether Pi is simply biding its time before making a decisive move. While short-term sentiment remains cautious, a closer look at the underlying technical structure and broader market patterns suggests that Pi Network might be gearing up for a breakout that could surprise many who have written it off. When studying the charts, it becomes apparent that Pi is currently in what is often described as an accumulation phase. Traders familiar with Richard Wyckoff's theory of market cycles will recognize this stage as a period where prices move sideways within a relatively narrow range, typically accompanied by lower trading volumes. This kind of behavior is not unusual following sharp declines or extended downtrends, as it represents a moment when the market is attempting to find equilibrium. The low volatility and diminishing volume, particularly since May, have reinforced the view that larger players may be quietly accumulating positions while waiting for a catalyst to propel the next big move. One of the strongest technical signals supporting this possibility is the emergence of a double bottom pattern around $0.3167. In technical analysis, a double bottom is considered a bullish reversal signal, especially when it forms after a prolonged decline. The pattern essentially shows that sellers are struggling to push the asset below a critical support level, while buyers are willing to defend it vigorously. The neckline for this formation is around $0.4646, a level last tested in August. If Pi manages to breach that resistance, the token could rally sharply, potentially delivering gains of around 35% from its current range. In addition to the double bottom, Pi's chart is also showing signs of a falling wedge formation. This is another classic bullish setup, characterized by two downward-sloping trend lines that gradually converge. As the price approaches the point of convergence, the likelihood of a breakout increases, with the direction in most cases skewed toward the upside. For Pi, the wedge has been narrowing consistently, and if history is any guide, it is only a matter of time before pressure builds enough to trigger a sharp upward movement. Still, traders need to remain mindful of risks. A decisive drop below the $0.3167 support would invalidate the bullish scenario and could expose the token to fresh lows. However, the repeated defense of that level over the past few months suggests that sellers may be running out of momentum, lending weight to the case for an eventual reversal. The accumulation phase, while often dull for casual observers, is crucial in the larger market cycle. It typically precedes the markup stage, where prices rise rapidly once a catalyst appears. To understand how this might play out for Pi, one only needs to look at recent examples across the crypto market. Cronos, for instance, had been trading quietly in a narrow range until news of a high-profile partnership involving Donald Trump propelled it into a dramatic rally. Similarly, the OKB token broke free from stagnation after its team announced a significant token burn program, sparking renewed investor interest and sending prices higher. These examples underscore the fact that in many cases, assets do not need months of hype or continuous updates to reverse course. Sometimes a single piece of news is enough to awaken dormant demand. This brings us to the much-anticipated Pi Network upgrade, which the developers have recently announced. The upgrade involves transitioning from Stellar Protocol version 19 to version 23, a technical adjustment that will align Pi more closely with the current functionality available on the Stellar network. Since Pi relies on the Stellar Consensus Protocol, this update could enhance efficiency and provide developers with more tools to expand the ecosystem. On a purely technical level, the upgrade is undoubtedly significant and represents the team's continued effort to keep the network aligned with broader industry standards. However, the market reaction to this upgrade has been muted, and for good reason. While protocol improvements strengthen the underlying foundation, they do not address the primary issues currently weighing on Pi's valuation. Traders and potential investors are less concerned with back-end adjustments and more focused on whether Pi can gain meaningful traction in the broader crypto ecosystem. The two developments that would truly capture the market's attention are a confirmed listing on major exchanges and the introduction of a sustainable token burn mechanism. Without these catalysts, the upgrade, while positive, is unlikely to generate the momentum needed to lift Pi out of its slump. Exchange listings remain a critical piece of the puzzle. Many projects experience dramatic rallies when they are listed on large, reputable platforms because it instantly expands accessibility and liquidity. Right now, Pi trades in a limited fashion and lacks the exposure enjoyed by more established coins. If Pi were to secure a listing on one of the top-tier exchanges, the impact on demand could be immediate, as thousands of new traders would gain access to the token. Similarly, a token burn initiative would signal to investors that the team is serious about creating long-term value by reducing supply, which in turn could support higher prices over time. Until such catalysts materialize, Pi's movement may continue to depend largely on technical dynamics and the patience of its community. It is worth noting, however, that accumulation phases often stretch longer than most expect. And when the breakout finally arrives, it can be both swift and dramatic. For those who have been following Pi closely, the current price levels could represent an opportunity, though caution is always warranted given the speculative nature of the asset. In conclusion, Pi Network finds itself at a crossroads. On one hand, the charts are showing encouraging signs of an impending reversal, supported by bullish patterns like the double bottom and falling wedge. On the other hand, the absence of meaningful catalysts such as major exchange listings or token burns keeps enthusiasm contained. The upcoming upgrade, while necessary from a technical standpoint, may not be enough on its own to ignite a rally. As history has shown, markets can change direction suddenly and unexpectedly, often on the back of a single announcement. For Pi, the groundwork is being laid, and the stage may be set for a significant move. The question that remains is whether the right spark will arrive in time to take advantage of the strong foundation that appears to be.